Hey everybody, it's KNIGHTON Real Estate Advisors, and I want to take a little bit deeper dive into what's happening in this market. Now, we were calling this shift coming at the middle to end of February, seeing the spring market of increased inventory coming a little bit sooner than what you would usually see in the seasonality of things, especially here in Southern Ontario. But we were saying the market is shifting because we get to see kind of a backstage pass as to what's happening behind all the listings that we do. We do quite a few listings, so we kind of get a better understanding of what's actually happening with buyers out there and seeing where they're coming from, seeing the momentum of the market. And we started calling it about mid-February, saying we're really starting to see a shift now. Now, prices weren't reflected directly right away with this kind of new information that we're seeing, but it takes a little bit of time to change consumer perception. So let's go back about a month ago. People were still saying the market's crazy. It's all I heard from a lot of people. The market's nuts. The market's crazy. Prices are still going nuts. And I said, for certain properties, yes. And relatively compared to the last few years or any other time in history in Southern Ontario, the market prices or the prices, average price across the market in our board anyways, have been through the roof, which is fantastic. However, seeing this surge of inventory, which we've seen, and seeing the lack of buyer excitement and demand, we've really seen it. There's a few reasons for it. So when I kind of go over this, it's kind of looking at an overall broad view. But the one thing I always say to people is that your home, or any property, is its own little market. You have the greater, world economy. You have the Canadian real estate market. You have Ontario, where we are, and then each individual board, each individual neighborhood that you have. So you're going to have different factors for each one of those. Now, you take that down to each individual home. Each individual home is its own market in itself. May not make a lot of sense. However, if you have a buyer pool of 10 people looking at this 3-bedroom bungalow in Lower Stony Creek, and you have 10 people looking for that, and there's only one of those homes, well, you're usually going to have a bidding war, and you're going to get an excellent price that compared to what traditional consumer perception of value would be, because someone's going to pay a little bit more for that, which is great for that seller and for the buyer if they're able to get that one. Now, if you remove that buyer from that buyer pool and you have the exact same house right next door, a lot of times we'd hear our clients say, well, that one sold for, say, 1.2. Mine has to be at least 1.2, if not more. And what I would say to that is maybe, because if you have 10 people that are looking for this home and it drives that price up through competitive bidding, and somebody gets out, but the next person, so you have that one person that purchased, you actually remove them from that economy because there was one product and 10 buyers. That one buyer is now removed, that product's gone. So now there's another one very similar, although never the exact same. You only have 9 buyers, and if their perception of value is only 1.1 to 1.5, or they don't like the color of the kitchen or whatever that may be, it doesn't necessarily mean that place right next door, even though it might be the day after, is worth the exact same amount. It's very, very subjective to those buyers as to what that price would be. So I'm hoping that makes sense a bit. Just think of your personal home as an economy on its own, and it kind of runs off of the perceived value of what's going on in the neighborhood and other homes like it. So we've seen a lot of downwards pressure in terms of pricing. Now, people say this, Chris, you're over exaggerating. I can show you on averages. I said this past week we've seen a drop about 10% off those ultimate highs. And again, nothing to be worried about. The markets go up and down. However, to understand what's happening, I definitely want to look at average prices and weeks of inventory. Just to give you an idea, weeks of inventory means if we took 0 more listings, with the current absorption rate, it would take that long for us to deplete the entire inventory of homes on the market. So what we saw last year, we saw an average price, I'm just taking Stony Creek, Hamilton, and kind of our board there, of around $800,000 to $850,000 on average, okay? This was last year. And we saw a lot of upwards pressure on pricing because weeks of inventory, we were in and around between 1.2 and 2.5 weeks of inventory. That is extremely low. Now what that means, again, if you sold all the homes, it would only took no more listings, sold all the homes, it would only take 1 to 2 weeks. It was historically low. Now in a balanced market, they say it's anywhere from 6 to 8 weeks of inventory. But the way the speed of market and the way that information flows right now, this was super, super quick. So what was happening is that the speed or velocity of sale was happening so fast that people were getting feverish and bidding over asking price. And that kind of drove this market up. Not a bad way, because my parents overpaid for their home 10% back in 1979. Maybe they're watching this, maybe not. They paid $33,000 for the home they still live in Old Stony Creek. Did they overpay for it? Maybe at the time. Relatively, no. Real estate is typically increasing over time. So if you're still staying with me here, congratulations, because I know this stuff's super boring, but understanding it is very important. March 2022, we saw, this is where it gets interesting. Average in the Hamilton market, about $1,033,000 for your average home price in Hamilton, Stony Creek. Now, the weeks of inventory here were also super low in the below 2 weeks of inventory, because it kind of went up and down. But we started to see back in February more and more listings coming on, and more of these feverish buyers that had purchased, they'd exited the market because they purchased something, so they weren't there. The buyers that were left over, there was less of them, and a lot of things happened over the last month, and we saw a huge shift in and around the March break, spring break. We saw potential third world war that freaked a lot of people out. A lot of things to do with interest rates, what's happening, and just buyer fatigue, not to mention just everything else that's happening in life. COVID, all of these things that are happening. We saw a massive slowdown of buyer activity. And again, those other buyers that already purchased, they're now out of the market. So today, this was for this past week, our average price in that same area, $908,000. $908,000. That is, doing quick math, that is a 13% decrease in average prices. Now again, this isn't across the board. You're still gonna have homes that get over asking price. They're gonna have to have something that's really attractive to those people that are looking for that particular type of home. But we've also seen the average weeks go to 4, if not a little bit more. In Halton, so Burlington, take a guess in your head. I'm gonna get this wrong, I think, but I believe it was 5.7 in Niagara, 5.4. What we can say is greater than 5 weeks of inventory. If you look at the difference between a few weeks ago, I'd say a month ago, or 2 months ago, when we really started to see this market shifting and tried to, people that were trying to take advantage of the market, get them to enter the market quicker because we saw this coming. This is a really, I hope this helps you understand kind of what's happening, because basic supply and demand and consumer perception and consumer sentiment drive every single market, whether it's cars, homes, stock prices, whatever it may be. So all this is saying to me is that we're having a curbing of market heat, or the speed at which homes are selling, and it's actually taking the prices down from those highs which they were. Going back to 2017, we saw the exact same thing happen. So I don't know if we can see it down here. I'm gonna go, we saw a spike and then it came down around 2020, came back, and then we saw this in 2022. This was about a 2-year period, which it took prices to get back to where they were. So people even that bought in this high right here, they might've been a little bit concerned or worried. But guess what? Over time, that long-term investment, especially for your own personal home, is something that, in my personal opinion, we are not going to see a major downshift long-term in Southern Ontario. There's too much demand. There is not enough supply. The government does a great job of keeping the market afloat with keeping interest rates low, even though they are increasing them. So all of this being said, this is a 10-minute video. I did not want to make it this long. However, these are the things that we look at every single day. If you are looking to get any more information all in your particular market, your particular neighborhood, your home, or just have a conversation about real estate and understanding what's happening, where the opportunities are, because there's opportunities on both buy and sell at all times. So if you have any questions, give us a shout anytime. Again, if you stayed through this whole 10 minutes, kudos to you, and appreciate it. If this is boring, my apologies. If you liked it, let me know. Cheers, everybody. Have a great Monday.